All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin in the crypto markets. Welcome in, everybody. Welcome in, Travis Bird, CD, Fettuccine Genie. When am I going to make it pump? Let's talk about this next area of support here, maybe then. And R Pink, welcome in. Thank you so much for modding. Thank you for being here. Okay, guys, so Bitcoin is getting quite an aggressive dump today, and you can see here we're dumping down. We're at our support level, our little support level, next level of support underneath that golden pocket. But we did see a pretty big wick past that level of support, and that to me is concerning. We might see a small bounce from here. This kind of liquidation cascade that we saw earlier today might have been the end of today's dump. We are getting a decent rise right now. You can see a lot of long positions are stepping in right here, and those are new long positions. But be aware, because if we cannot get a decent bounce from this area of support, those longs will be squeezed, and the long squeeze to the downside will continue. So I want to talk about a few things here. First of all, guys, let's zoom out on. Let me talk about this range. This was our upper range that we were talking about. And after breaking, I talked about this all week last week, after breaking our market structure bearishly by breaking these lows of the range here, breaking market structure on high time frames, we were expecting a lower high to come in on the charts before seeing another lower low come in on the charts, creating that overall bigger WXY corrective move. And sure enough, as we were coming up here, we had multiple confirmations of bear divs on the chart. We got that rejection and lost our value area low of our range, our 6-7 week long range. But the key thing that happened yesterday, and I was a little bit hopeful yesterday, because what happened yesterday is we bounced from our local golden pocket support down here, and we came up to backtest these two anchored VWAPs. Now, these two anchored VWAPs are very strong volume resistance now. The reason why is because it's our larger downtrend from the all-time highs. So if this overall corrective move is going to continue down to new lows, then after finishing this W wave X, the X wave up, then you would expect to reject at this area and continue down here. And it is also our anchored VWAP from those 107.2K lows. And so you can see how both of those anchored VWAPs came in perfect confluence with each other. And yesterday we broke the highs of our little range, just our little itty bitty range here, a couple day range that we were forming down in here, and broke the highs, took the liquidity from the highs of our micro range, hit into our anchored VWAPs, could not. We tried to get above them. If we zoom in on the hourly chart, you will see that we did try to get above them, but we could not really sustain price action above those anchored VWAPs. And of course, that is when we reject from that area. After rejecting from that area and losing your value area low again, it's a bad sign, and you can expect some new lows to come in on the charts. So we did. We got the dump today, and sure, some of this happened because of the news. But now we are also back inside of our pitchfork band. Our big, not our pitchfork band, our Fibonacci channel, 618. So you can see yesterday we did bounce pretty much perfect from that 618 Fibonacci channel. What we were looking at, though, is we talked about this in last week's streams. This white line here is the midline of our main channel. So let me zoom out onto the 2-day time frame. Now, on the 2-day time frame, this is very, very important macro analysis. Let me go ahead and clean this chart up just a second here. Actually, I'll leave that on the charts for now. We rejected the top of the main parallel channel. Now, this parallel channel goes all the way back to the beginning of the bull market. This parallel channel was pulled from our three major lows down here. And you can see, let me actually zoom out onto the weekly time frame. You can see how well this parallel channel has been respected the entire bull market. Every major swing position was at a major touch of this fib channel. Now, after we got to the top of the fib channel, after our 50% pump in early May, we rejected the top of that channel on the weekly time frame. Or now let's zoom back in onto the 2-day time frame. You can see that we did attempt to get above that channel here, but we could not, and we had a $14,000 corrective move. Then we attempted again, and then a third time with our most recent all-time high to get back above this parallel channel. This is the main parallel channel that is the main bull market trend. with your midline being this white line in here. Now, that midline has been super, super important support throughout the entire bull market. You can see here, if we zoom in here, after the initial three were made, came down to the midline, bounced, came down to the midline, bounce, came down, yes, a little bit of some wickage below that, but midline bounce, midline bounce, midline bounce. And where is our midline coming in again right now? Our midline is going to be coming in at that very important 105K support that we have marked out. We have a naked monthly point of control, which is a high time frame volume level of support at about 105K. And then we have our anchored VWAP from the 74K lows that's coming in now. It's about 105.7. This box of resistance that we've had marked out since what was that, September 4th, September 3rd, we marked this box out during that time frame, has been a resistance level or support level that I have been watching as a potential bigger three-wave corrective move to come down to that level before seeing potentially one more new all-time high to end the bull market. So we are getting that dump. It is an aggressive dump. It does look impulsive to the downside. Today, we might get a little bit of a range that forms at this area. But if we look at that Fibonacci pull from our 107.2K lows up to our highs, and we turn on that 886, let me make this a yellow color. Our 886 has not been tapped yet, but it is very close. Now, if we hit this 886, it does give us a higher probability to take out our 107.2K lows. But since we've already lost the golden pocket, which was right around, that golden pocket was right around the 618 of the Fibonacci channel, if we close today's daily candle underneath that golden pocket, so let me go ahead and throw that golden pocket back on there. We'll just take this 886 and change it to the golden pocket, which is going to be around 111K. If we close the daily candle below 111K, that will be confirming a daily candle close underneath our Fib 618 golden pocket line. And I would expect a move in the next week or two to come down to our next major support level. Yes, we could see some bounces beforehand. We might, in a very bullish case scenario, we might come down and just grab the liquidity of our 107.2K lows and not come down to 105. But to me now, it's looking highly likely that we are going to come down to 105K. And if the thing is, guys, if we don't hold 105K, it's going to be really bad for Bitcoin. The bull market might be, if we start to close weekly candles underneath this white midline of the parallel fib channel, then it's going to be looking very, very disastrous for Bitcoin. We would also be entering and closing weekly candles back within our macro volume profile. So let me go ahead and hide a few things here on the chart. And we will look at that 2025 macro volume profile, which is our entire range of 2025. So you can see that if we start to close a weekly candle back underneath this 109K level of support that we are at right now, it could be very disastrous for Bitcoin. We could see eventually a move down to our 96.5K level of support and even coming down all the way to take out our lows of 74K. Now, speaking of those lows at 74K, I have shown you guys this multiple times, but we have our big 5-wave impulse to the upside on the weekly time frame. Actually, let me go to my Bybit chart or Binance chart, and let's turn on that 5-wave impulse. So we have our 5-wave impulse that potentially ended back in January, the end of January. Now, after that 5-wave impulse, any impulse is done, you're expecting a corrective move. In a traditional sharp correction, it's a 3-wave move down, and generally that 3-wave move down actually comes all the way to your golden pocket, pulled from the lows of the impulse to the highs of the impulse. We did not see that. We actually said in the most bullish case scenario, if we're going to get a weekly correction that lasts 6 to 9 months, then we actually want to see a flat correction in here and then continue the bull market. Now, that is still a possibility here. We talked about this afterwards. If we are going to see an expanded flat correction, okay, well, what are our targets? First of all, if you come down all the way through here in a multi-month correction, and then we break above your previous high, you're looking at a flat correction. And so if we take our Fibonacci's and we go from the highs of that push, that initial push down to the lows, and we come into our fib and we turn on our 1.382. So let me just click this. We'll go to our 1.382. And we turn that on. Where did we reject? Well, we rejected from our 1.382, which is the target for a flat correction, to reject from that macro 1.382. Now that we're rejecting from that 1.382 with weekly bear divs, daily bear divs, losing our, that was also the bearish backtest of our fib channel, our macro fib channel that was up in there. I know this is confusing now, but that means that we could see, if we lose 105K and start to close weekly candles below that, we could see a move all the way back down to take out those lows of 74K and creating our bigger flat correction in here. And then hopefully after that flat correction ends and we take out those lows, we can start another new impulse to the upside to continue the bull market. That is a scenario that I've been keeping track of for months on the chart, and I am still looking at that as a valid scenario that could play out. We do not know if that's going to happen yet. We are far away from that so far, and we are still kind of in this upper portion here. Let's zoom back in onto our 12-hour chart here. And we're still just within this larger upper range in here. And until we lose this value area low and anchored VWAP of about 105K, this general area, I'm not going to be looking at that too much as a possibility, but we do just have to realize that there is a more macro scenario where we do see that flat correction coming all the way back down to take out those lows. And sure enough, if we took out those lows, you'd be taking out those lows into your pitchfork band of support. And generally, this move could take a few months and we could see some bounces in there. So actually could be closer to the bottom of that pitchfork band that we're seeing the taking out of those lows. Because if we pull our, let me get rid of those, let me do that. If we look at our macro golden pocket, let's go on to the 2-day time frame, and we pull a golden pocket from the 49K lows. Oh, excuse me, wrong one. 49K lows to our all-time high, and we turn on that golden pocket. Where is that golden pocket coming in at? It is coming in right at that macro level of support, being your macro pitchfork midline, lower band, excuse me, the liquidity grab of those lows, and your macro golden pocket. So just going to say that this could get really bad. This does look somewhat like a topping reversal pattern, left shoulder, head, right shoulder, or a distribution. And I talked about this both on Ethereum and Bitcoin last week. As the range is forming here and you have bear divs on the chart with money flow leaving the asset, remember the last time this happened. I showed you guys this exact thing last week. The last time we had a distribution range where you had bear divs confirmed, money flow leaving the asset as the range was forming, you got the big distribution down. Well, we have bear divs confirmed, money flow draining out of the asset, and if we start to break this 105K level of support, then we could see that big distribution down all the way to take out our 74K lows. Of course, there will be some stops along the way. I do want to show you, let's go back to our Coinbase chart now, and I do want to show you one level of support. If we look at this macro 2025 volume profile and we put on our trend-based Fibonacci extinction, that is going to be pulled from the highs here to the lows of 107.2 to our lower highs where we rejected at 118K. That is your trend-based Fibonacci extinction to measure this, if this is just a sharp correction down, to measure the correction. Now you can see we have two important levels here. Between the 1-to-1 and your 1.236 are your main targets for that corrective move to end. Well, if we lose 105K, yes, we might see a little bit of a bounce from 100K, but look at where that 1.236 target would be coming into in that correction, right at your macro volume profile. And here's the thing, guys, if you start to close weekly candles back inside your macro value area high, back inside and find reacceptance back into this macro volume profile, you have a very high likelihood of continuing down to 96K. Now, we might see a strong bounce from 96K, only to come back up to back test that prior range, this prior range lows, or around the value area low of this prior range. and then continue the big push down to take out those lows, seeing a bigger impulse down. So let's keep an eye on this, because we do have the bearish confirmations on the chart suggesting that this is a real possibility. Money flow draining out of the asset on the 2-day time frame. 2-day time frame bear divs confirmed. Weekly time frame triple drive of bear divs confirmed. Money flow draining out of the asset finally has kind of rolled over. If we close this weekly candle red, this money flow is going to start to roll over. You can also see on NAMI, we do have the triple drive of weekly bear divs on the money flow. Money flow is getting lower and lower and lower every time we make one of these major all-time highs. And so it is looking pretty scary right now for Bitcoin. It is not going to lie here. It's looking pretty scary for Bitcoin. Also, if we're talking about this being this last push up from 74K being a contracting diagonal or an ending diagonal, then the case for that is we could see that as a wave 1, a wave 2, a wave 3, a wave 4, a wave 5. That is your contracting diagonal that ends. And once the contracting diagonal ends, you can see a move all the way down to your golden pocket. So if we pull a golden pocket from that 74K low to our all-time high, golden pockets coming in between 91 and 93K. And we could see a move that far down as well. Let me see real quick here on that measurement. Yeah, that's getting close to a 30% move. So you might want to take this and put this on log scale as well. And you could see a move down even to 90K or 89K. But that's kind of what we're looking at here now, guys. Locally, Bitcoin is trying to hold our support level, but we did wick past it quite a bit. We're at our local support level that I laid out yesterday, the last week, that if we did lose our golden pocket at 111K, this was the next level. We said we would instantly flush down there. We instantly did. And look at even now, actually, this is a little bit concerning to see now that we have this macro volume profile on our chart. We're losing the macro value area high that's coming in right around 109.9K. And if we're going to come up and backtest that locally today or tomorrow and reject there, that is a bad sign. So let's throw this macro volume profile all the way. And you can see right now what's happening is today we have lost that volume profile, value area high. We're backtesting it right now. And right now we're starting to reject. We have a daily and that 886 right below us where we could see a bounce from that 886. We do know that on more macro ranges, those 886, Bitcoin especially, loves to react off those macro 886s. And if we look at our 2024 range that we saw, Bitcoin went to those 886s multiple times. If we pull this here and we turn on that 886, where did Bitcoin reject? The 886 here. So 886 rejection, got a major drop down. Then if we pull another Fibonacci from the highs to the lows, you can see that Bitcoin rejected the next 886 rejection there. And then if you pull another Fibonacci from those highs to those lows, you can see, actually not on that one, it was a different one. There was 3 886 rejections. I believe it was from here to here, that 886, not that either. There was 3 886 taps within this macro 2024 range before ultimately breaking it. So we do know those larger 886 levels do get respected, and we do have an 886 level coming up here on top of that daily at 108.2. And if we are going to look at this as a range that is starting to form in here, actually, yeah, I would say all of this, then that 886 might give us a little bit of bounce from this low to this high. 886 could give us a little bit of a bounce, but then I would expect to continue down here. Okay, that is kind of what I'm looking at with Bitcoin. Let me check the chat here. So welcome in, everybody. King's World, welcome in. Nice little sale. Yeah, you know what? I think it could continue too. So let's see how this goes. You know, we did have strong bearish divs on the chart, and look at our money flow. Our money flow looks pretty aggressively crossing into the red again on NAMI, and kind of heavily draining on Market Cipher B. And that's not a good sign here. That means we could see continuation to the downside, because remember, money flow dictates that overall trend. and money flow has been leaving the asset and continuing into the red as this range is forming here. So it could mean a distribution range. Okay. What's up, Tiamat? Welcome in, man. Thank you so much for modding. Thank you for being here. Quiles 1100, welcome in, man. Yes, guys, please hit the like button. If you get anything out of this video today, please hit the like button. It's always going to drop more than you're ready for, and always going to get higher than you expect. Yeah, I mean, that is crypto, right? Crypto's very volatile. And so when it drops, especially because of the amount of leverage in these markets. And also when it pumps because of the amount of leverage in these markets. And that also the sentiment is so strong. Okay, Sui's bouncing from the SFP. We'll check out Sui in just a second. 74K watching and 14 likes. Yeah, guys, please hit the like button. And also just thank you for being here. Thank you for being here. Dr. Rex, welcome in. CC, Andrew, welcome in. Ludong, welcome in. Team B Willa. Thank you guys all so much for joining. I appreciate you all. Let's go ahead and take off this macro volume profile. And let's look at that intermediate range. Let's see. I was looking at a different one as well. So if we pull that range this way here, sideways, you can see we're coming down to that value area low. So let me hide this guy. We're below the value area low. That guy rejected this double anchored VWAP, which was very key thing that happened yesterday. And after rejecting that double anchored VWAP, showing that this downtrend had more steam to come, it looks like we have some support levels below us where we can expect to see small bounces. Small bounces from that daily 886. We could get a decent rise from that. We could get a bounce from the value area low, liquidity grab of 107.2, get a decent bounce, but we might continue working our way down to that 105 to 105.7K level of support, which is our macro support level that we're watching. Now, if we do get down to this 105K level of support, we do not want to maintain too many daily candles underneath this value, the value area high, the macro value area high. Excuse me, that's not it. It's at 109.9. Let's turn on that macro volume profile real quick. This value area high that we're pretty much at right now. So if we come down here, yes, we'll probably spend a day or two underneath it, but we want to get back above that very quickly, flip that into support, and start to see impulsive price action to the upside. Impulsive price action making one more new all-time high. That could give us a very, very nice top for the bull market. And then we could see, unfortunately, a bear market start or a bigger multi-year correction. Now, I do want to take a parallel channel real quick, and we're going to connect. Anytime you have a high like this, a major high like this, and then you reject from the lower high golden pocket, after breaking market structure bearishly, you can take this and you can put it on as a descending channel. And let me make that pink. You can see now here, we're at the midline of the descending channel. Let me hide this. At the midline of the descending channel, and we have a very nice descending channel that is respected both on the top and the bottom, and our midline here. So very nice descending channel. If we do lose 105K, yes, I would be looking for some sort of bounce near the bottom of the channel, 101 to 103,000, depending on how long it takes. But if we start to lose 105K, it's really not going to look good for Bitcoin. It's really not. You can also see at that 105K level, we do have an internal liquidity grab of these last daily lows before this last big parabolic move. Big parabolic straight up move here. So there is going to be liquidity, important liquidity, resting at those lows, even though it's an internal SFP. Let's check out what Bitcoin is doing here. Yeah, I do not like how we're rejecting like this, guys. We're flipping that naked daily point of control. So this green box that I had here, well, first of all, you can see it's our channel midline that we're at right now of the channel that I just created. But if we look at the naked daily points of control, we had that naked daily point of control at 109.8. And then we had our 786 Fibonacci, excuse me, 786 Fibonacci that was at 109.5, or really 109.6. And so that's what this box is here. Box of support, naked daily, and that 786. And we're starting to lose that. It does not look good here. Let me just make sure real quick on my trades. Yeah, okay, we're good. Okay, so yeah, that's kind of what I'm watching for here on Bitcoin. Now, the way we are impulsing down today, it is kind of scary. The way we are pushing down, seeing these big volume imbalance candles in here. Yes, we're creating some fair value gaps that could come in to get filled, but this does look impulsive to me. And earlier, we were looking at this 5-wave move down. All of this week, we were looking at this as a wave 1, a wave 2, a wave 3, a wave 4, and then a wave 5 here. And yesterday we said, okay, we potentially completed the 5th wave. Now you expect to at least see a 3-wave corrective move, potentially up to the golden pocket, but generally the minimum you'll see is the 382. And we did not actually hit that 382. If we pull that Fibonacci and we go to the 382, oh, we did hit the 382. So we rejected from the 382, guys. And that was also, and the 382 rejects us in a strong trend. So we can tell right now we have a very strong downtrend because we, after finishing a 5-wave impulse, we came up to the 382, which is the minimum target. We rejected that 382. That means we could start a whole nother 5-wave impulse down to 105K. Unfortunately, that could also be the start of a much bigger wave 1, wave 2, wave 3, wave 4, and coming down wave 5, coming down much, much further of a bigger impulse to the downside on our way down to 74K. So that is what we're looking at right now. It's not looking too good for Bitcoin. You can see money flow kind of looking bad. Yes, we do have potential bull divs on the chart here. But with that money flow looking bearish, we want to wait for that money flow to start to bottom out here. And we didn't bounce from a key level in particular. We came down to like 108.6. Now at 108.2, and then that 886 level, that is going to be right above that at 108.5, 108.475. That would be the next level of support where we could end today's dump. Around there. We could see a small relief bounce from this little area of support. But yeah, it's not looking too good. Not looking too good for Bitcoin. Let's go to the 5-minute real quick. Yeah, money flow's leaving on the 5-minute again. Ooh, it just doesn't look good here, guys. It doesn't look good for Bitcoin. I'm not confirming the end of the bull market yet. Actually, here's the thing. Like I just talked about on the higher time frames, if we're going to have that super cycle theory that some people are thinking now that we have institutions in crypto, we could see that super cycle. So here's the thing. After your weekly 5-wave impulse ends, if you get that flat correction and come down and take out those lows at 74K into your macro golden pocket support, take the liquidity of those lows after taking the liquidity of the highs. After that 3-wave flat correction moves, that flat correction here moves, you could start a whole nother huge weekly impulsive cycle that could last another year or so. So even if you come down to take out your lows at 74K, it's not necessarily meaning it's the end of the bull market. But that does mean, and we do now have a higher probability of coming down here if we close on this weekly candle underneath our 2025 macro volume profile, which is where we're at pretty much right now today. It's at about 109.9K. All right. I hit the like, you hit the like button twice. We'll just hit it 3 times for me, okay? Thank you, Fettuccine Genie. I appreciate you, man. If you have time, can you look at WLFI? Yes, we'll take a look at WLFI. We'll look at Ethereum and SUI. Let me check SUI real quick because you said there was an SFP of the lows. Let's go in onto the 2-hour chart. Yeah, we did get an SFP of those lows, and we did talk about that as a potential bounce level in on our way down to 295 to 289. But yes, that's the midline of your descending channel. Remember, we had a fake breakout of the descending channel only to hit up into your POC and to your golden pocket. And after doing that, 1, 2, 3, 4, 5 impulse here. So this impulse could be done with the SFP of this low. We could see a corrective move here before seeing another 5-wave impulse to come down to that 295 to 289 level. But yes, so this does look like a nice SFP right now. We do have bull divs on the chart here, but your money flow doesn't look the best. So if you did take this SFP, I would absolutely keep that in mind, keep it open. But now you're going to have, let's just zoom out to the daily chart. Okay. And I want to look at this weekly. Was that our freshest weekly candle that closed? Yeah. So we're breaking down past the weekly. Now that weekly, because there was no reaction at that weekly at 324, actually we already had it locally, but you see we broke down through the weekly, back tested that weekly, and then made new lows. So that weekly, again, now that you've had a low time frame back test and rejection from that weekly, now you could have, after grabbing the liquidity, a higher time frame back test to that weekly. And if you reject, expect to keep coming down. But because we could have finished our 5-wave impulse here, being the wave 1, 2, 3, 4, 5, with the SFP liquidity grab, now in a very bullish case scenario, or it's still overall bearish, but in a relief bounce scenario, after your 5-wave impulse ends, now you're going to pull your Fibonacci from the highs of the impulse to the lows of the impulse, and we're going to put on that golden pocket. There is a potential you could rally all the way up to this golden pocket at 363 to 365. I would be aware, though, because we do have this level of resistance, which is the value area low of our 3-month long range in confluence with the POC of our 2-year long range. So, and let's see, is that our 382? Let's put on our 382. 382 is close by, but not quite. Nice SFP, though, and we are rejecting from your VWAP right now. Be aware that if you start to reject from this VWAP, you could be doing the same thing that we did earlier today. Look at the trend earlier today. Make new lows, come up to VWAP, reject VWAP, make new lows, come up to VWAP, reject VWAP, make new lows. You could do that again. So if you're on that SFP, I would look at least taking some profit or pull a fib from the lows of just a few hours ago or a couple hours ago to the highs, turn on that golden pocket. If you lose this golden pocket, then you probably have a very high chance of making new lows. Okay, let's go into Ethereum really quickly, and then we will talk about, now Ethereum finally came down to our box of support. Guys, for about a month now, I've been warning you guys of a bigger distribution up in this area because it was the top of a macro pitchfork, and we were seeing that left shoulder head, right shoulder pattern form, money flow, bear divs confirmed, money flow draining out of the asset as that range forms. This is what we're looking for Bitcoin to do if we lose 105K. This is actually a very, very good example of this. Distribution range here. You lose the lows, you start to distribute, and we could distribute all the way down to 3,500. But today, we're finally starting to lose this range, and let me get rid of some of this here. And you can see now, where is our 1-to-1 Fibonacci extension that we covered in Tuesday's live stream and yesterday? Let me zoom out to the 4-hour. So in that 4-hour corrective move, remember, we had our initial push down here. We bounced from the value area low, and then we came up and made a lower high. So if you pull a trend-based Fibonacci extension from the highs to the lows to your lower highs, you could get that 3-wave zigzag corrective move. If we're looking at that 3-wave move down in a wave 4, in our macro wave 4, you generally want to come to between the 382 and the 0.5 Fibonacci. Well, I've been talking about this for over a month now, ever since our all-time high was put in. Actually, ever since this high was put in. I've been talking about forming a range at the top of this pitchfork. If it's a distribution range, you might get that macro wave 4 correction. Let's zoom out to the 2-day chart. You might get that macro wave 4 correction. Remember, this being a wave 1, a wave 2, your wave 3 ends, taking the liquidity from the all-time high. Then you're going to get a 3-wave corrective move down to the 382 or a 3-wave corrective move down to the 0.5 in your wave 4 before seeing a final 5th wave to new all-time highs, completing the weekly impulse and potentially the end of the bull market. So for me, yes, I was expecting this drop on Ethereum. I was expecting a distribution at the top of our channel, pitchfork. I was expecting this. We saw this forming. I warned about it all last week. I warned about it all of this week. And now we are starting to distribute down from this distribution range. Breaking market structure bearishly, by the way, by taking out the range lows. Now we have officially broken 2-day market structure bearishly. And we could continue lower. before getting the big move up. I actually would prefer it. I would prefer to come down to that $3,600 to $3,500 level. Massive, massive support here. Massive support. Okay. Yeah, we'll look at some of the altcoins, guys. Oh, is the volume still quiet? Is volume okay, guys? Let me turn this up just a little bit. Does that help? Or now am I swallowing the mic? Let me know. Sorry, sometimes guys, I have an XLM mic, which you have to hold pretty close to your face. And sometimes I do lean back a little bit, which makes the volume be a little bit quiet. So I am sorry for that. I'm working on being aware of that. Real quick, Solana is coming down to that macro pitchfork midline. Macro pitchfork midline here on Solana. And we talked about this. If Solana was going to reject from the top of its pitchfork, we did reject from the top of its pitchfork after hitting into our macro resistance. I've been talking about this resistance for about a month before we hit into it. We came down to the pitchfork band, lost it, back tested it, come down to the midline. Now, here's the thing. I did say earlier this week that the midline was a little bit below our green box. Our green box was a naked weekly point of control in confluence with a weekly and a daily at 200. And this was about 194, 198. And so I said we might see a wickage, a little bit of a wickage past. But here's the scary thing for Solana. This does look like a wave 1, a wave 2. All of this looks like it's part of a wave 3. So we could bounce here and get a move up to your local 0.382 to 0.5 before seeing even one more push down to your golden pocket, which is going to be around 187 to 184. So that could be, and of course, after you finish a big impulse, now you're going to expect a correction down to the golden pocket. If it holds, you can expect another big impulse. So 187 is in the cards for Solana, but we are at a bounce level of support on Solana as well. Local, yeah, this could be the end of our wave 3. Yeah, we've already passed the 1.618. The thing is, after hitting into that 1.618, we didn't really get a fourth wave correction. If we were going to be looking at a smaller 1, 2, 3, 4, 5, in here, we didn't get a proper move break in market structure for a wave 4. So we have to count all of this as a wave 3. And if we turn on our 2.618, we're probably hitting the 2.618. Let's see here. 2.618. Okay, yeah, right around that 2.618. It might even be the 3 fib. Not quite. Okay, so Solana is at support, but be aware, it does not look good. We are forming some nice 4-hour bull divs on Solana. Lower lows in the price action, higher lows in the momentum waves, and your money flow at least looks to be bottoming out a little bit better than Bitcoin. Now on NAMI, it's not, and NAMI is in jeopardy of invalidating the bull divs on the 4-hour. Let's go to the 8-hour here. Yeah, 8-hour money flows just crossing into the red and heavily in the red here, but you do see we have 8-hour bull divs. If we start to close 4-hour candles, we're at the 4-hour time frame right now, and you can see this wick past the midline. But if we start to close today 4-hour candles below this midline, we're probably going to move straight to the golden pocket at 187. Okay, am I charting USDT dominance? I do look at it sometimes. I haven't looked at it in a bit. Let's look at some coins. We did SUI. Real quickly here, we'll look at HBAR. Okay, HBAR is rejecting from our point of control. Let's throw this all the way and let's. Yeah, okay, so we have our upper range in here that goes back to July, the middle of July, and we're losing the value area low of that range. To me, this does look like it could be a bigger 1, 2, 3, 4, 5, kind of a sideways correction. Or actually, let's look at this as a descending channel. So let me hide this range. But you can see we're rejecting our overall macro POC, and we're coming down to the bottom of the pitchfork. If we start to lose this pitchfork, I mean, really, I expect us to come down to that golden pocket. From the lows to the highs. Yeah, that golden pocket, and let's make sure that is on log scale. Ooh, okay. Let me measure this here. Yeah, it's over 100%. It's over 140%. So you have to put that on log scale. So this is your proper golden pocket here. That kind of sucks, to be honest, but it is what it is. Let's see. I still will leave that box on the chart because you can see there's some internal range in here, and there's probably a POC or a value area low in there. And then we can also look at this bottoming range in here. Actually, I'm going to throw it on from here. Yeah, your POC of the bottoming accumulation range is right around that golden pocket. So you could drop all the way down to 17 cents, 17 or so. Now your macro volume profile here. You can see this macro volume profile. The value area low is coming up. And since we did reject the POC and we're having impulsive price action downside, it is highly likely that we at least make it down to that like 20-cent area, 19.9 cent area. Let's take this, get rid of that, and we can throw on that descending channel there. Let's throw it to this guy here. Bring it to your first low. Yeah, I mean, let's check this low. Definitely looks better. Okay, so this is your descending channel, and there is a potential we could just grind down in this descending channel, like bounce here, come up here, bounce here, to come all the way down to your golden pocket at the bottom of the channel. That would take some time, of course. It just doesn't look good, guys. Let's go out to the daily chart. Yeah, if you lose this macro value area low, it's not going to look good. Because overall, our larger market structure, lower low, lower high, lower low, lower high, lower low. Yes, we broke it, but now, so because we broke these internal highs, you could come back down to this and bounce. That's your bullish case scenario. But your more macro scenario, lower low, lower high. Now you could see a lower low, like a weekly continuation of bearishness. I want to look at one more thing here. Let's pull that channel. Okay, guys, this is a little bit scary. So let me hide some of this stuff so you guys can see this. So we have our mini channel that we just talked about of the last few months of price action. But our larger trend, the trend I just told you about, the larger downtrend that we're seeing. I mean, look at where the channel midline is coming in at. So not only do we have the channel midline there, we have the bottom of our smaller channel there that could be coming in right around that golden pocket. It's looking like we could come down to the 17-cent area if things start to get really bearish here. Yeah, I have Dr. Rex, very good. I have log scale always active because here's the thing. When you zoom in on smaller time frames, the log scale doesn't make a difference. It only accounts for high volatility, high percentage moves. So if you're pulling a fib here you know, from the low to the high, a high to low, excuse me. And even though you're on log scale, you don't change this to based off log scale. On lower percentage moves, it's not going to make any difference at all, or it might make the most micro difference in the world. But on higher moves, if you're always on log scale, it's going to be correcting for those large percentages. And very rarely will I take it off log scale. I just be aware that if it's more than 100% pump to the upside, you're going to change this fib to based off log scale. If it's more than a 30% dump to the downside, you're going to take that fib and you're going to put it based off log scale. 100% move up, 30% move down. Okay. So locally on H-bar, we're losing the midline of our channel. You can see we had a nice little bounce here, created a lower high. And once again, guys, I talked about this with Bitcoin the other day. When you see these like ascending channels on low volume, as we're making that relief rally with lower volume, that's a corrective move before generally coming down and taking out your lows. And we've done that now. And we're continuing even locally to reject from the midline. After losing the midline, we're starting to reject earlier today. You can even see earlier today what happened. Let me get rid of this. Earlier today, bounce from the midline, bounce from the midline, make a move up, make a lower high. Now we've lost the midline, and now we're rejecting from the midline. So we could continue down to that 20-cent level where your value area low is. Now, at the value, this is your macro range value area low. I expect at least some reaction here. Zooming out to the daily chart, this range goes all the way back to December of 2024. So yeah, a large range that this value area low should at least give us some sort of reaction. Let's do. Okay, and I want to just look at that 0.5. Yeah. I don't like this box too much anymore, but let's check out some time frames here. So we have our monthly level marked out, of course. Let's check out our weeklies. Look at this weekly fair value gap in here, this weekly imbalance, and coming down to that golden pocket would pretty much fill that fair value gap. So it's just looking more and more like this thing might actually come down to 17 cents. I don't want to be the bearer of bad news, but that's, you know, if you start losing this value area low at 20, there is nothing in here to keep you from dropping quickly down to 17 cents. Nothing in here. No structure, no order blocks. Let's see if there's any volume levels. No volume levels, at least naked monthlies. Let's look at our naked weeklies. Now, we won't be able to look at naked dailies because the indicator doesn't go back. Okay, this is nice. Look at a fresh naked weekly point of control at the value area low. So if you're looking for a local long position, that's it right there. Naked weekly point of control into your macro value area low. $19.9 to $19.8. That's simply what I would be watching. Okay, that is it for H bar. Thank you, R Ping, for stopping in. I appreciate you, man. XLM, we'll check out XLM real quick. XLM USD. I don't know if I've ever charted XLM. Yeah, I guess I have. Ooh, it just doesn't look good. We didn't even react from our support levels. So no SFP here. No SFP here. Gosh, that dump invalidated both of those. So those were bad. And now on XLM, we even tried to bounce from this one, but we didn't. So let's see. Well, we're at our weekly level. Not the 2 week, the week. Yeah, you're at your weekly level of support. You're seeing some sort of reaction here at that weekly level. If we lose this weekly level, I mean, like, look at that big fair value gap in there. And look at, there is no structure in here. This is bad. If you start to lose this weekly level, the one thing that you can look at is an SFP of the range lows, which is this here at, we didn't quite hit it yet, 34.4. But if you do not SFP those lows, not only will you probably see a drop, you could see a drop to the bottom of the channel, 29.30 or so. You've lost the value area high. Yeah, you've lost the value area high of the range. Let's see, this daily's been taken out. This daily's still fresh. That naked daily is still. Let's see. Yeah, naked daily is still fresh. It's in the correct spot. When you're zoomed out onto the daily, it looks weird, but if you zoom in onto any other time frame, that is the correct spot for it. If it loads. Maybe not. Okay, that was a different one. All right, so a new naked daily. Yeah, I would say coming down and SFPing these lows into your channel midline might still happen. But if you SFP those lows and then you don't bounce from that SFP, I mean, you're going to come down at least to the bottom of your pitchfork at 32 cents, and then you could come down to 29.5 cents. Order block, you do have a 4-hour order block in here at 30.5, but that's about it that's there. Oh. Yeah, and even this 1, 2, 3, 4, you need to take out that low. And if you're going to take out that low, you're so close to this low, you're probably going to take out that low. So it is looking likely that you're going to take out that 34.4 low. I would watch for the SFP of that, because if you do get the SFP of that, that could be a nice long position. You do have some bull divs forming on the chart here. Money flows bottomed out and looks to be coming up here on the 4-hour chart. So if we come down to SFP 34.4, actually, there we go. And now if you bounce from this weekly and you start to range, you're probably going to start to form a sideways range in between this area here, but you're probably going to start to form a smaller range first in between this area. Yeah, because you lost, look at the pitchfork band support, pitchfork band of support, but then you lost it, rejected it, pretty much you front ran it, but rejected it. So now you might work your way down to the bottom if you don't SFP. Okay, USDT dominance. Wow. Okay, we're breaking up out of looks like an accumulation range. Guys, this is the bad thing. This is what we're seeing here. This is not good to see. So we bounced from our 886. We formed a small accumulation range. That's what this was. This was accumulation range at the bottom of a major dump. Actually, let's do this. Let's look at this. Very clean. 1, 2, 1, 2, 3, 4, 5. Well, you could look at this as a wave 1, 2, 3, 4, 5. Either way, that's impulsive price action to the downside. This here's clear impulsive price action to the downside. You have a bigger three-wave corrective move. This looks like a 1, 2, 3, 4, 5. You get a three-wave move down, and then a 1, 2. That's kind of hard. That might be a WXY correction in there, but it looks like a three-wave corrective move, and then you got another big. Yeah, that does look three-wave-ish as well, but we're continuing bearish market structure on USDT dominance. We end at the macro 886, and you form a bottoming range here. Now, here's the key thing. That's accumulation range that's forming. And if this accumulation range starts to break up, which we're breaking above it, flipping, you can see here, we broke above the value area high, back tested that value area high, and now we're breaking the highs with no SFP. It's likely that we could continue now to this value area high up here at 4.84, 4.85%. Let's look at pulling the fib from the last major daily high to our low. Let's turn on that golden pocket. Okay, your golden pocket is near that value area high. So I would say we could keep coming on USDT dominance up to this general area. And what does that mean for the market? Probably more dumpage down to 105K. But this breaking above this high, we just broke above it today at 4.6%. So if this daily candle closes above this high, it's not a good sign. And actually, you could say this high. Above 4.61%, then we're probably going to continue up to this next resistance area. Now you break above that resistance area, you're breaking this larger range value area high. And in that case, you would pull a fib from your highs to your lows, and you could make it all the way up to this golden pocket, which hasn't been touched, because remember, this wasn't a touch of it because this low wasn't made. And you might SFP your highs here into that golden pocket. Man, that would be harsh. Coming all the way up to 5.25 to 5.3. And guess what? After you see nice, look at rounded bottom, left shoulder, head, right shoulder, whatever you want to call this, a Model 2 accumulation. After accumulation, you see expansion. And we could see the bear market start. Coming up to 5.32, rejecting, coming back down to back test that macro value area high. Now breaking up to the top of the channel, taking out these highs into the top of the channel. And then if you break the top of this channel, man, I mean, dominance could shoot up pretty high again. Because overall, this range that goes back to March of 2024 almost looks like an accumulation range as well, a larger weekly accumulation range. Okay, let's see here. Are you charting USD? Okay, yep, got that. Levels are fire, especially for scalping. Yeah, and well, let's look at the total chart too, because the total chart gives you a good bias on what is going to happen with the market. So total chart is losing the value area low of our big daily range, our upper daily range, after rejecting from the top upper band. So it looks like we could move down to that midline. Move a little bit lower over the next couple days to 3.61 trillion. 3.61, 3.62. I mean, this higher highs, lower highs, money flow draining out of the asset as the range forms, distribution, right? More likely, not guaranteed, more likely to be distribution. If we're looking left shoulder, head, right shoulder, or a Model 2 distribution, this thing could distribute down all the way to this golden pocket, actually. And if you look at this golden pocket pulled from your last major low to the high, where's our previous range value area high coming in? Right at the golden pocket. So we could see dominance actually distribute out of this all the way down there. If we come down to the midline and we bounce, then you guess what? Your distribution range might be continuing for a bit more. forming a bigger, more mature range before dumping down. But either way, the way that this looks with money flow really draining out of the asset overall does look like this could be distribution up here on your macro total chart. Okay. Where am I at in here? Yeah, smashing the like button bring 10% more to your P&L. Yeah, it's true, guys. It's true. Real quick before we go on, guys, I just want to talk about the partners of the channel. So our first partner and main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. They are a great exchange with low fees. They have some of the lowest fees in the games. If you sign up using my affiliate link, you can get initial deposit bonuses. If you deposit just $100, you can get a 50% deposit bonus. You'll get 20% discounts on trading fees, and you can earn up to $8,100 in futures trading bonuses, depending on how much volume you trade in your futures markets. And then, of course, if you deposit more, you can earn various 10 to 20% deposit bonuses, and you can get up to 40% off trading fees, depending on which tier you get into, trader or whale trader tiers. And then I've partnered with BYDFI to create my own Telegram community. If you're interested in joining that community, it's free. All you need to do is sign up using my BYDFI affiliate link, and you need to deposit at least $100. That $100 is your money to trade with. You'll get the 50% deposit bonus, and then you can get access to the Telegram group where I post some of these trade setups and some of this market analysis ahead of time. So you don't just have to catch it on the live stream or in the videos. And that link is in the description for the Telegram. Now, once you deposit your money, you can go into the Telegram link, type in /verify, and then your user ID. It's going to be a string of letters and numbers up here. For me, mine's custom for Divine Hood, but you can type that in, and then you'll have access to that Telegram group. Next up is NAMI. NAMI is a momentum and money flow indicator that I use for entry and exit confirmations. They are running a 50% off special if you use my affiliate link. Link and the discount code, which is Divine50, are in the description below. And then the other two exchanges I'm partnered with are MEXC and Bybit, and both those links are in the description below as well. They're both offering discounts on trading fees and futures trading bonuses as well. Okay, let's see here. When you trade SUI, SOL, XRP, do you also look at Bitcoin and ETH for confirmation? Sometimes I do, sometimes I don't. Old Will Market, Markel. If I'm seeing that Solana's coming down to its key support and we have bull divs on the chart, even though Bitcoin might not be at support yet, I'll still look at taking the trade. But I generally do peek at dominance as well. I'll come down to Bitcoin dominance. I'll peek at dominance, and I want to see dominance rising, which dominance is rising now. Actually, this is, dominance falling, which means altcoins would be pumping against Bitcoin. This is actually kind of bearish here, guys. We had our bottoming range. We're breaking above the value area high and breaking back inside of our channel, but we're breaking above the golden pocket, the large golden pocket here. We could see a pretty big move up on dominance. You can see this bottoming range. And this golden pocket was pulled from our last, let's go out to the 2-day time frame, from our last major low to our highs. This is your golden pocket. And we fell below that golden pocket, back tested it. I was almost sure we were going to come down to this 786, but now we're breaking back. If we can break above this golden pocket, then we might see a little bit of a rise here. To me, it would be surprising. I think that it would be more probable to continue down to that 786, but if you start to close today's daily candle above this gold 59% pretty much, or 58.95, then you're going to continue probably pushing a little bit higher. Yeah, and this does look like a three-wave move. Okay, can you do AVAX? Yeah, we'll look at AVAX, and then we'll look at Arbitrum. Quiles, thank you so much for the super chat. We'll definitely look at AVAX and Arbitrum. So AVAX, AVAX rejected from our major resistance. I talked about this, guys. And even last week, what did I say last week? We were rejecting from this golden pocket, but I said, guys, I would like to see one more high to actually take that liquidity. And if we go zoom into the 4-hour chart, we did make that one more high. We came up to take that liquidity. It was an equal high. But we did come up, hit that liquidity level at 36.17. And first of all, I gave this as a scalp level over the weekend. Someone asked me in the Telegram, Spartacus Crypto, I think it was. So we had that initial drop down from the golden pocket. We came down to our local level of support where I said we could see a bounce. We got that bounce and we came up and we took out the liquidity. Now this looks like it could be a flat correction. Your initial low, you come up to take out the highs of your A wave. Now you come out to take out the lows of the A wave. If this is a flat, then you would expect to move back up here. If it's not, well, it still could be a flat, and then you could still continue dumping down. But the next major level of support on AVAX is that golden pocket that's coming up at, let me zoom out more, at $26, which is the value area high of your accumulation range. So this was major accumulation for a chain AVAX. Your accumulation range in here. We talked about this last week. You came up value area high rejection, value area high rejection, value area high rejection, value area high rejection. You finally break it up. Usually when you break that up, you will break up to your next major resistance. Well, our next major resistance was all this up here. Swing failure pattern, point of control, naked weekly, point of control, weekly level, daily level, golden pocket. So major box of resistance. Now that you've hit into this major box of resistance and you're rejecting, you're going to come back down to backtest not only the golden pocket, but the value area high of the accumulation range, right? This was your accumulation range value area high. So it's highly likely we come down to 26. Now, if you come down there and you hold it as support, guess what? You have a high likelihood of continuing up to your next major box of resistance. So at $26, it could be a good swing long position to bring all the way up to $42, $44. Be aware, I mean, actually, that looks really, really nice for a potential swing long opportunity if we get down to $26, because you have your accumulation range. If you're breaking it up, you reject from your resistance, come back down, bullishly backtest, and you continue that expansion, because now we're in the expansion phase. You were in accumulation, now you're in expansion. So this for me, major. Let's do this. I will actually be taking that trade. If we come down there with bull divs, I will be taking that trade. Locally, though, yes, it does look like we are rejecting your macro resistance. We had the bear divs confirmed on the chart. Lower highs, money flows now draining out of the asset. Bear divs, money flow bear divs, and money flows crossing on the 8-hour into the red. At the very least, we're probably going to continue dropping a bit here. But let's zoom into the 4-hour chart and let's look at this little topping range here. So we can pull the volume profile of just this topping range, and you might bounce at the value area low once you grab liquidity. So if you come down here, grab your liquidity around 28, 22, you could see a small bounce only to come up, reject that POC to continue down here. So that's kind of what I would be watching for, is a 28, 22 could be a small scalp long position, but $26 is the real area. I mean, if you come down to 26, ooh, it looks good. It just looks good. But I will give you warnings. We were also looking for the same thing on Chainlink, right? Chainlink. Now, Chainlink's a bit different because it's not so much an accumulation range. It's a much larger topping range on Chainlink. But we broke out of that macro. Let me turn off some of these levels. We broke out of that macro value area high, right? This is your macro value area high, broke out of it. Now, if you come back down for the bullish back test of it, you confirm it, you might work your way up to the next pitchfork band of resistance, because it's a 2-year long range from November 2023 to almost November of 2025. So almost 2 years long. If you break above that range now in the back test, if you hold it, you expect to make at least come take out these highs here. But if we don't hold it and we fall back inside of it and start to close this weekly candle back inside of it, I expect to move back down to $18 or even to $16. Maybe first a move to 18, a bounce, back test that $20, then go to $16. But this looked bad. Higher highs in the price action, lower highs, money flows now draining out of the asset, crossing into the red on the daily. It doesn't spell good for a Chainlink, and I really did want to see this position work out here. It is still, we did take out the liquidity from Sunday's lows. That was a weekend low. We kind of needed to come take out that low, so we finally did. But you can see right now we're having trouble regaining it, getting back above it. And if you can't get back above it by the end of the day, really, if you can't get back above 20.6 by the end of the day, you're going to be in trouble. What we want to see is a pierce to that level, get back above it, flip it to support, get back about 20.6, flip it to support. And then you'd be having your lower lows here. You have your higher lows here. Money flow doesn't look the best, but on it doesn't look the best either way on the 2 hour. 4 hour, you do have the bull divs here. So it is looking potentially like we could get that nice position still to play out for Chainlink. But for me now, we have SFP'd that low, but we're not really reacting the way we want to. So I am not going to look for a long until we reclaim the value area high at 20.6. If you do, stop goes below the low, I would at least be targeting the value area high of this range, this upper range. But honestly, I would be targeting, we're probably going to make it up to the POC or even back inside up to the value area high. And so that would be I would be playing this as a swing position. So I would actually be looking to take it all the way up to take out your prior highs. Let's mark those out at $31 pretty much. But once again, not taking it until we reclaim that value area high at 20.6. Taking it up to 31. That's a very nice risk reward. If the low is in, if it's not, then we'll have to look down to $18. All right, I got off track there. I'm sorry. Let's go to Arbitrum. Okay, Arbitrum's at the bottom of our descending channel. This descending channel we looked at on Tuesday. At the bottom of the descending channel. We did break the 786 though. Our local 786 pulled from this low to this high. We've broken the 786. Not a good sign. Oops, wrong one. And we even back tested this daily and rejected. Lost the daily. Back tested it locally and rejected. So we're going to get rid of that daily. We can get rid of this one too, actually. And it looks like we're going to come down to this golden pocket. Golden pocket is coming in at 38 to 39 cents. I actually like the weekly and in perfect confluence with the 0.65 of the golden pocket at 38.28. Yeah, that looks nice at 38.28 because your 6.5 is right on top of your weekly, your fresh weekly there. It's also a daily level there as well. So it's a weekly and a daily level. And your golden pocket. I mean, the way this looked though, guys, higher highs, 3 higher highs, 3 lower highs, money flow draining out of the asset. There is a potential that we could drop all the way down to this area here. It's your big midline, your channel midline. You can see the last time we bounced from that midline, we got a nice reaction. And also, It is another weekly, a naked daily point of control, and the value area low of this smaller range. Which by the time we get down there, that value area low might shift down a little bit and be in confluence with that. As smart as like the major levels for me is 38, 28, and then this like what 34, 35 to 33 cents. The thing is, here's the really kind of scary thing with Arbitrum. Unlike AVAX and Chainlink that broke out of their, or at least AVAX that have, this is our accumulation range, right? This is our accumulation range here. Well, what happened? We tried to break out of our accumulation. Left shoulder, head, right shoulder. Now it's breaking down. So a failed breakout of accumulation here could mean a move all the way back down to the bottom of the to take out the lows of accumulation, or at least to the value area low of the accumulation range, which is that 33 to 35 cent area. Actually, unfortunately, let's zoom out onto the 2-day chart. Yeah, this looks really bad. I mean, it looks like we might be coming down to value area low again. Also, you that's the channel midline of your descending channel. And a weekly, a daily, a naked daily POC. 786 is down there. It just looks like a very strong support level. And I'm going to actually adjust that box a little bit to make it. So Quiles, that's what I'd be looking at because of this failed breakout of the accumulation range up here. And you're now breaking this structure down. You had your range lows in here. This upper range that we were looking at here. You're breaking it down, and you did not SFP your range lows yesterday or earlier today. Of course, we could do this and just grind at the bottom of this channel in a smaller until we hit that weekly, or see a deviation of the channel come down to that weekly. But at this point, that weekly and that 0.65 golden pocket at the exact same level, 38.28, look pretty, looks like we might be coming there. But if we continue to bleed down like this, like I just showed you here, and like a small descending channel towards the end, to that weekly level, you could be forming massive divs in here. 3 lower lows on the price action, and you do something like this. 3 higher lows on the momentum waves. Your money flow is already starting to curve to the upside here. Same on NAMI. That would actually be a really nice long position from 38.28. I already have an alert set here to look for a long from there. So we are forming the divs, the confirmations already. If we come down to 38.28, it could be a very, very good long position. Yeah, guys, Bitcoin's rejecting that back test of the macro value area high. We're back testing, we're rejecting. I think we're going to continue coming down to this 886 and this daily. When I pull a fixed range volume profile on the Bybit platform, you don't have value area high, value area low, only POC. Yes, that's just in settings, Dr. Rex. So when you come and pull a volume profile, I'm just going to do this real quick. Let's pull that range. Come into your settings and you go to style and click. See, if I click these off, it will just show you the POC. So just click on value area high, click on value area low, and it will give you that. Also, you're going to want to set your row size to between 200 and 240. Value area is 70%. Now, if you want to make that extend right, it will extend right. It will keep extending. The range will keep growing automatically as price action goes. I don't like to use that for the fixed range. You can do that if you want. So it will automatically update as more candles are printed. But say you're only trying to measure this range here, this upper range, and you have that clicked on, it's going to keep measuring all of this price action. So I keep it off because we're trying to measure the volume of a specific range. Okay. Dang, you guys are way far ahead of me in the chat. BlackRock files iShares Bitcoin Premium Income ETF. Nice. Okay, well, they'll probably get it. We are dumping so they can fill their bags. Yeah. Okay. Oh, Mark Dutch, what's up, man? Welcome in. No, it's real leg hair. No. Well, I was taking my leg hair and putting it on my head, so I'm not bald, right? They plan on offering this product to their clients. Okay. Yes, please hit the like button, guys. If you got any insight into any of the altcoins that I've covered or into Bitcoin, please hit the like button. I do have a typewriter, or I'm just a slow typer. I'm sorry. How do I pronounce it? It's T1 Tematic. Tim Attack. I don't know. You're gonna have to like spell it out for. I'm sorry, dude. I don't mean to do that on purpose. I'm just really bad with names. Yeah, my YouTube sucks. I know. My typing skills suck. No, I'm glad you don't sugarcoat it. Thank you for that, Mark Dutch. What's up, big deals? Welcome in, man. DJ Raves to the queues. To improve it for my haters or my audience. Nick Cypher is in the chat. Okay, cool. I see an option for a long entry at 108,250. Yeah, same here. TP 112.5. Yeah, we could come up to that general area. I think the thing is though, we have now the larger range. Let me get rid of this. And let's look at that 4-hour chart. This intermediate range here, the value area low is at 113. So if we do bounce from this 886 in this daily level, we could come up to backtest that value area low. And if we backtest that value area low and reject, then I expect us to come down to 105. Yeah, we did look at USDT. It doesn't look good. It definitely doesn't look good because you're breaking out of accumulation here. You have your accumulation, breakout, back test of it. You probably are going to continue up to this golden pocket, value area high. And you're above your large range point of control, so you're probably going to come up to that large range value area high. It just looks like USDT dominance is going to come higher because we didn't SFP the range highs, and we're breaking above our channel midline as well. Not looking good. A little bit more dumpage to come. Nick equals market cipher developer. Okay, cool. Well, welcome in, Nick. Is Nick the actual developer of the market cipher, Crypto Faces market cipher, or is it a different form of one? I'm sorry, I haven't heard of you yet, Nick, and I'm not trying to be mean or anything. I just haven't heard of you, but I'll have to check you out. Yeah, okay, Nick, where did he go? I can make him a moderator. Just so I know he's got a channel and everything. And time attack. Okay, thank you, Mark Dutch. Tiamat, which is not Tiamat, Time Attack. I'm sorry, bro. I'm so sorry. Cool. Yeah, guys, check out Nick's YouTube channel. Looks like he's a relatively small creator like me, but awesome. And he's into fitness too, which I love that because I am as well. I think a lot of crypto guys are into fitness because they're into discipline. Like traders are into discipline. But yeah, check him out. I'll have to check this out as well. Okay, let's check out Bitcoin. We've kind of died down for today, but let's throw on that macro value area high, guys. That macro value area high, all of 2025 price action. And what happened just now? Let me hide this box now that we're. And I'm going to get rid of this naked daily because we tapped into it. And then let me turn off the dailies and the naked dailies. The thing is, we broke back down below the macro 2025 value area high. That's this value area high here. Let me hide this range. Macro 2025 value area high. We broke down below it. We just back tested it in the last hour, 2 hours, and we're rejecting. So it looks like we can probably continue down a little bit more here. See that back test and rejection? At least on low time frames, confirming that we might want to stay back inside the macro value area, volume profile until we at least come down to 105 or so. Also, earlier today, we rejected the VWAP. Remember, on a bearish continuation day, if you come up, you test that VWAP, you reject, you can expect to continue the bearish sentiment for the day, or bearish, what am I trying to say? Momentum. Awesome time attack. Tim with dick. 200 burpees. Wow, 200 burpees. That's crazy. I did 15 this morning. Not 200. Wow, look at the money flow. Look how bad the money flow looks here. No bull divs on the chart yet. 30-minute. Hourly, pretty bad money flow. No bull divs on the chart. Now, NAMI's got some bull divs, and the money flow is starting to curve up, but I would expect to at least come down to this 886. So let's see. The 886, remember, guys, in ranges, like I showed at the beginning of the stream, the 886 does often bounce you in ranges. And yes, it is kind of the middle. Like we kind of had this range in here, and then this upper range in here. But we're still technically in this upper range, even though we've lost the value area low of the range today. Even though we've lost the value area low of the range, we're still within the range. We're coming for the lows of the range. And so 886 could bounce us. We could do something like that, or we could get a little bit bigger of a bounce to come up to this value area low. Yeah, that's what I meant. You could get a bounce from the 886 to come up to this value area low at 113K. And then back down to 105. Because now that we've lost this value area low at 113, if you come up there and bearishly backtest and you reject, then you're going to expect to take out your at least your 107.2K lows. But remember, we're looking at the bigger WXY correction too, and we rejected from our golden pocket. We have our nice descending channel. We're losing the midline. Yes, guys, please hit the like button. Thank you so much. Let's see. What else do we... Push-up pro. Nice, dude. You know, one thing, I just am not good at push-ups. 4-hour ready to print a green dot on Market Cipher. Yeah, ready, but not printing yet. We still have 3 hours and 10 minutes left in this candle. Easily in 3 hours, we could come down to hit that 886, start to get the bounce from there, and then print that green dot. And it would give you some bull divs as well. XRP, yeah, let's check out XRP. Jesus Save 77, thank you so much for joining. And same with you, Samuel S. Welcome in, guys. XRP is just now, XRP is actually not dumping as much as some of the other coins, but I talked about this yesterday. If we lose this value area low, we have a high probability to take out the weakened lows. Remember, weakened lows and weakened highs often get taken out. Well, our weakened low, we could take out that weakened low into our double anchored VWAP and the midline of the channel. Once again, just trading in this descending channel. We had the fake breakout, fell back in. So I'm thinking this could be next. Now, those two anchored VWAPs from the previous all-time high is your anchored VWAP. Now, remember, when you have a downtrend and you keep rejecting from that anchored VWAP on the downtrend, if you break it to the upside, in a healthy market, you'll often come back to backtest that VWAP before continuing the trend, just like a breakout of a volume profile. And so we have that anchored VWAP. And guess what? Our previous range value area high is right there as well, right around there. So 256-ish. You have your channel midline there. You have your value area high, previous range value area high there, and you have two anchored VWAPs. You also have the anchored VWAP from the lows at that 382 when we bounce from that macro log 382. And remember, we're still looking for this. I talked about this months ago on the channel. Wave 1, wave 2, wave 3, wave 4, and then we could see a wave 5 to end it. The issue with that, if we take our fib from the lows of 3 to the highs of 3, golden pocket is going to be coming in. Now, let's make sure that's on log scale. Okay, perfect. So, guys, if we come down to backtest 256, as long as we don't hit 245, let's say 244.79, that would invalidate the impulse, right? And remember this, we bounced from our macro 382 on our much larger impulse. We from the lows to the highs, we came down to your macro log 382. Since you bounced from that macro log 382, that means it's a strong trend. You as soon as we bounce from here, I expect it to make a new all-time high. I expect it to impulse to a new all-time high. Well, if we're from that 382, a wave 1, a wave 2, a wave 3, wave 4, wave 5, we could end the bull market just like with Ethereum, a 5-wave impulse, and come up to maybe, $4 or $5 or so. What I'm looking at with XRP, if we take that trend-based Fibonacci extinction, and we rejected right from the 1.618. So from the lows to the highs to the lows, and this was on, now this is using the non-fib chart. I understand, or log scale chart, but look at where we rejected, 1.618. So 1, 2, 3. Now we can come down. As long as we don't hit this golden pocket, it doesn't invalidate it. If we turn on our 0.5, we haven't touched it yet. So generally your area is between the 382 and the 0.5, but sometimes you wick past the 0.5 a little bit. So we could be in this corrective channel until we come down, hit that previous range value area high and those two anchored VWAPs right around the 0.5, and then you could get that last push up, creating that overall 5-wave impulse to end the bull market. The fifth and final wave of it. Now, if we hit this golden pocket, that means that this is more 3-wave corrective, and in rare occasions you do pump to the 1.618 in an expanded flat correction. You'd see something very similar to Bitcoin dropping to 74. We would expect for this thing to drop all the way down to potentially take out your lows at 162 in a much larger flat correction in here. So hopefully not. Okay. Best thing I've done is shared the channel to my friends. It saves me hours of trying to explain what is happening in crypto. Well, Time Attack, thank you for sharing, man. I really do appreciate that. And thank you for being here. You're always here with me, and I really do appreciate that. I meant there's no value area low and value area high to set on the Bybit platform. Oh, on the Bybit platform. Yeah, I don't know. I guess, yeah, I don't chart on the Bybit platform itself. So maybe you could just chart it on your trading view and then mark, then go onto Bybit and get your lines and just mark it and then hit value area high. And then you could do another line, like mark it, hit value area low, make a template for it where it's value area low, value area high. And then you would at least be able to mark them out so you have horizontal lines where they're at. That's the only thing I can think about saying. I changed to pussy ups when I shared that on my Tinder profile. Oh my God. Oh, dude. Mark, the things you come up with, man, they're so great. So great. I got to work on my slogans. Tim Wiftick. Oh, gosh. Kara, thank you for being here. And of course, I'm happy to. What's your TP on XRP for wave 5? Well, so here's the thing. We won't know until we know where wave we'll have a better idea once we start to end the fourth wave, right? If we end the fourth wave there, because then you can pull a fib from the highs of the fourth wave to the lows, and let's just say it's that 256 area. And then you can turn on, let me actually grab the fib, from the highs to the lows, and then you turn on between your fib extinction targets for fifth wave, which is between the 1.236 and the 1.618. And that 1.618 is more common to be hit. It usually gets hit more. So between like 392 and 435-ish, if we come down to there. Now, if the low is in, we could just pull this fib to where it's at right now, 390 to 428. But I don't think the low is in. Even if we come down to the 0.5, let's say we tap the 0.5, it's going to be around, 390 to 430. So it's going to be around there, 392 to 434. And then once we start getting up there, no matter what, will be taking some profit on the spot XRP that I own. 77K XRP long liquidation. Oh, wow. Okay. So yeah, someone got liquidated. I always chart on TradingView, but it would be easy not to change tabs. I understand that, Dr. X. I'm sure it's frustrating that they don't have that on the settings for a volume profile on Bybit. I think on some exchanges, once you pull up the chart, can't you integrate TradingView within that? I think Bybit used to do that, where you can actually integrate TradingView within the exchange charting area. Yeah, how much do you charge per slogan, right? He should. He could make a lot of money. Sandy, thank you so much. That's so awesome to hear. You changed my trading career for the better. Can't thank you enough for these sessions. Well, Sandy, thank you so much for being here, and you should be proud of yourself for being willing to learn. I'll tell you what, I have never taken a course in my life. I have learned everything I have learned through watching other professional traders' live streams throughout the years. My first teacher was Bitcoin Hyper. I was a student of his for a while. And then, of course, Jason Casper. Andy from Bitcoin Consensus is really good. And then Coons. I've learned a lot of my Elliott Wave stuff from Coons. All great traders. You literally don't have to take a course. You can learn everything on your own. It does take dedication. It will take more time. And you do have to kind of tune in regularly to understand the way markets work as well. But after you get that down, it's really about discipline and risk management. And I'm telling you, discipline and risk management are the biggest things, especially risk management. So once you get that down, that is really when things can change. Okay, so that was XRP. Let's see here. Guys, BNB is coming down to that pitchfork midline soon. And I was talking about on BNB. So, well, that was local. This is local TA that we were looking at. But on BNB, if we come down to this midline at about 940-ish, that we could see a bounce from the midline, a 3-wave corrective move to bounce from that midline, and then we could make one more impulse up to the upper band at around between 1120 to about 1170 to finish this, because we're above this midline now, and we've closed multiple daily candles above that midline. So to see one more push up. Now, on the other hand, if we lose this midline, I mean, we could drop significantly down. I would pull a golden pocket from your last big daily low up to that high. Golden pocket coming in. Actually, let's see. It's close to a 50% move, but it's not enough. So yeah, golden pocket 786, because that 786 is in nicer confluence with the pitchfork band. You know, come back down to $800 or so. Or if you really wanted to get bullish, you could pull the fib from the lows here. To the highs, and then you can turn on that macro 382. And that 382 is going to be around that pitchfork band, but because that is more than 100% move, yeah, it's 116%. You're going to want to come in onto this fib and change it based off log scale. So yeah, about $800. That would be, you know, if you lose that midline, you're going to see something like that. I mean, I'm not saying you're going to bounce up to immediately to the upper band, but you're probably going to see a drop to come down to that 382. And even holding the macro 382 pulled from this low to this high would be a strong sign that you're going to continue the overall uptrend on BNB. BNB's been great. BNB's been like spectacular to trade, to look at. Okay, I mean that 1-to-1, the 1-2-3-6 is better because you would take out these internal lows here. If you are going to see a bigger 3-wave corrective move, take out these lows, but you would be below your pitchfork band midline, so you'd have to watch for that instead too. Okay, let's check out. We did Bitcoin, we did Ethereum, Solana. Solana is at the pitchfork midline, but guys, it's not really holding. This was a naked weekly POC, a daily level, a weekly level, and your pitchfork midline. It's not really holding, which is concerning to me. And this looks like 1, 2, all of this looks like a third wave here. So even if we bounce 4, and then you could get that 5 to come down to your golden pocket, that golden pocket at between 187 and 184. Also, if we look at this entire move up, yeah, you rejected from the top of the pitchfork band. You could drop all the way to the golden pocket or the 786. And yeah, so, and you want that to be on log scale because that's more than a 100% move. So you're going to change that to based off log scale. If you're not based off log scale, you just front ran the golden pocket just now. But I think that we would be coming down potentially, if this is that big of a wave 3, wave 4, you could make a wave 5 all the way down to 173-ish. The bottom of the pitchfork band, your 2 anchored VWAPs, and your 786 down here. But 184 to 187, at least expect some sort of reaction, because in this small triangle thing that we were seeing in here, these lows are right into that as well. So you have some internal liquidity into that thing. Okay, I'm going to do IMX real quick, and then we'll get out of here. We'll check Bitcoin afterwards, and then we'll get out of here. You guys, thank you so much for joining today. I really appreciate all of you guys. Mark Dutch, I so much appreciate your your laughs every time too for joining and everything. Guys, on IMX, we have our accumulation range. This is our bottoming accumulation range on IMX. We broke out of that accumulation range and we took out our internal highs of the range, right? Those are your semi-equal lower highs of the internal accumulation range. Took out the highs, and now we're in the process of back testing the value area high of the range. If it holds, I expect us to move up to this 109 to 116 area. Support resistance flip, golden pocket, daily level up here. If we fall back inside of it, that is going to be a bad sign. And what that tells me is that this was a fake out of the accumulation just to take out your range highs. And now we could drop all the way back down to the value area low of the range, or even take out your range lows. But if you're looking at the bigger structure, this could be a bigger 3-wave corrective move to see something very similar to what we're looking at with Bitcoin, or what was the other one? The other one that we were looking at, XRP. If we take a fib from the lows to the highs, look at the golden pocket. Yeah, your non-log golden pocket is going to be around your POCs. So, if you lose this value area high, yes, you do have some fresh daily levels. Actually, let's look at the weeklies first. No weeklies in there. Let's look at our dailies. So that daily level coming in at 64.4 below us. Let's pull this. Ooh, okay. Your value area high is actually shifted up. You're back inside your volume profile. This is bad, guys. Let me take off this larger one real quick. So actually, look at this. We broke out of the accumulation range, took the liquidity of the highs, and then now we've fallen back inside the value area high, back tested it today, and we're dropping. Not a good sign at all. Not a good sign at all. We could see that move down to this golden pocket. Actually, we need to change that. That is... Ooh, yeah. Value area low golden pocket. Yes, thank you guys. Thank you, Mark Dutch. Give me a flag. What, oh yeah, flag. There you go. So, that is kind of what I'm looking at here for IMX. Overall, it's not looking good locally that we're back inside this volume profile. If you close today's daily candle after back testing it yesterday and rejecting, if you close today's back inside this volume profile, I expect at least a move down to the daily, but you're probably going to get that bigger move down. And let's pull our fib from our last lows of the touch of the value area low to that high. And let's turn on our non-log golden pocket. Okay, yeah. So that's your next level. The daily level and the golden pocket just below. Now you've hit the golden pocket 2 days ago, but you didn't hit the daily underneath it. So you might come back down one more time to actually hit the daily along with that 0.65 and then try to get outside of that. For me, if I was looking at playing this, what's going on here? Whoa, are you guys still with me? Okay, thank you, Sudeep. And Sudeep, welcome in. I have no idea what's going on with my trading view right now. All right, guys. Well, I'm gonna end this stream. I have no idea what's going on here, but just watch out for that close underneath that value area high. You could move down to that daily at 64.4, and then if you lose that, you're probably gonna continue a lot deeper. So thank you so much, everyone. I will see you tomorrow at 3 p.m. Eastern.